Well, good afternoon, traders, and certainly seeing a negative reaction across the Asian markets to that strong non-farm payrolls number. This idea that we're getting good news equals bad news for financial markets, this kind of ironic sort of perversity that we see coming through there, that the idea that better data lowers the probability that the Federal Reserve are going to cut rates at the July meeting is something that holds true. This is a market that loves liquidity. This is a market that likes lower rates, been pushing people out into high yield credit. It's been pushing people into equity markets. This kind of Tina idea that there is no alternative is something that definitely has been raging through markets. So the idea that the payrolls number effectively has lowered the probability, we've now got full 25 basis points of cuts being priced into those July meeting as opposed to 31 pre-non-farm payrolls number, has resonated across Asia. We're not growing because the labour market in the US is strong. It's going to create inflation, discretionary spending. We're selling off today because the idea that the Fed have less scope to ease at that July meeting. Certainly the debate in my mind is still one of whether we're going to get 25 or 50 basis points cuts, but a lot of people out there are suggesting that the actual argument we should be saying is, do we get 25 or do we get no cuts? The non-farm payrolls numbers probably suggest that we get no cuts or we get 25 basis points, but there are other data points that we need to consider as well. And that's why we go through this week. We really do need to consider what's going on in terms of Fed speak. Tomorrow night we get James Bullard. He was a big advocate before that the data didn't warrant a 50 basis points cut. So yeah, again, have we seen anything in there that necessarily changes his opinion? Then we go to the biggie. If on Thursday at midnight Eastern Standard Time, we get hear from the Fed chair himself. Jerome Powell will be testifying, and he will look at the market pricing with a 100% chance of a July cut. He will get a chance to guide the market. If they're not going to cut in July, he will let the market know about that. He will guide the market to lower expectations. Therefore, we are watching the US dollar, we're watching gold, we're watching equity markets. We want to see at least a 25 basis point cut to continue this march higher we've been seeing in equity appreciation. Ideally, we want a 50 basis point cut. Donald Trump would obviously be infused, but so would the equity bulls who want that idea of lower rates, a Fed that's prepared to get ahead of the curve. And so I think that testimony midweek from Jerome Powell is absolutely key. The Fed minutes, of course, is something that will be on our radar. They come out 4 hours after Jerome Powell speaks, but it's all about Jerome Powell and setting the expectations to the market now that we've seen this non-farm payrolls number. But that move that we saw in the front end of the US bond curve at the beginning, on Friday, up 10 basis points, has resonated through Asia. I mean, if we have a look at G10 FX, we can see very, very subdued moves playing through. We've seen dollar yen down about 6 points or so, but I think that's a reflection that front end yields are starting to see a few buyers. They're down a couple of ticks today, but dollar yen looks quite interesting. If we saw a move this week up into 108.70, I think that's a key resistance level there. But it's really been about Asian FX. You know, if you have a look at moves in some of the currencies that are sort of more high beta, we've seen some really big selling coming through in the Korean won, the Thai baht, the Indonesian rupiah, and that's a reflection of what we're seeing across those parts of the equity markets as well. The Kospi down 2%. That's had a big move today. So then you've obviously seen what's happening in the Hang Seng, that market down 470 points, the Japanese market down 203, and the Chinese market down 315 or so. So certainly, you know, you're seeing some weakness play across those markets as well. And the ASX 200 down about 1% as I speak. All sectors are down on the day. The selling's fairly broad-based. The volumes are not particularly high. Yeah, last time I checked, we're about 30% below the 30-day average. So certainly, you know, while we've got that selling which is broad-based, the volumes going through the market is not particularly screaming of a panic sell-off. I think people are just readjusting to the idea that the Fed may not be as aggressive as what we've been seeing. This high yield, this push into anything with yield and liquidity trade, partially coming unwound. But I don't think this is time to be panicking. If you have a look at the gold price today, you know, fairly flat on the session. But really what we're seeing today this week is going to be a continuation of this debate about whether the central bank policy path is as aggressive as everyone expected, and therefore all eyes on Jerome Powell so we can mark to market exactly what they think after the non-farm payrolls number.